to the stock portfolio update videos. Currently, my 2 stock portfolios sit at a combined value of over $101,000. That's made up of the $56,179 USD in my stake portfolio, and then the $45,507 in my Vanguard portfolio. Today I'm going to be going through some recent market updates, what's been happening with my portfolio, and just some general news and a bit of an update on how things are looking. First, I wanted to quickly give an update on how my portfolios are looking. As you can see with my stake portfolio, which is slightly my biggest, it's sitting at around 56,000 AUD. I'm currently up around 13%, or 13,000, which is around 30%, and that's mainly been made up by a lot of my big tech holdings being strong in the green these past few years. If you have a look through my portfolio, you can see many of the big names, and many of them have stayed the same over the last few years that I've been investing. That's inclusive of things like Apple, Amazon, Google, Microsoft, and even VOO, which is a market S&P tracking ETF, holds a lot of the big tech shares. Overall, you can see the ETF VOO is down 1.7% today alone. In the last week, it's also down 1.75%, and in the last month is down around 1%, so it's not been a very good month for investors. In regards with my Vanguard portfolio, it's down even further. One of my holdings is VLC, which is Vanguard's Australian Large Companies Index ETF, and if you've been following anything around Australian shares, you would have seen the hammering a lot of banks got recently. I'll go into that a bit more and break down kind of how prices are looking, but more on that to come. Vanguard's International Shares ETF, VGS, has also gone down from around $144 a share to around $142, so just a minor downgrade at that as well. But overall, that's what's taken my portfolio from being around 103,000 to 101,000 this week. I wanted to go through this side of things, just kind of going through a little bit of a stock market update and just tell you guys kind of what's going on in the markets overall. So Dow Jones was down on Thursday morning along with the S&P futures and Nasdaq futures. Walmart, Alibaba, Toast, and Carvana were big earners. Some of the main ones I'm going to be going through include Alibaba, which we'll go through now. And if we have a look through Alibaba stock, you can see it's up in the green and it's had a very, very good past 6 months and month. It's something that I've been keeping my eyes on, and I actually just did a short on it today. So Alibaba stock, after Alibaba reported better than expected fiscal Q3 results, the e-commerce and cloud giant dipped 1.1% to $125 a share on Wednesday after running up from intraday trading of a low of $80 a share in January the 13th to a 52-week high on Tuesday. Alibaba stock is extended from $103 cup with hand buy point. Overall, it's been a very good time for Alibaba investors, and this is actually a stock that I used to own in my portfolio. I shifted out of all my Chinese tech stocks and mainly focused on the American ones about 3 to 4 years ago, and overall it's been a very good decision for me. But it's still nice to see people who held, or people who do believe in a company like this, are really starting to hopefully get a bit of rewards. Another one I wanted to go through is the stock market rally. The stock market rally has a relatively quiet session, with the major indices rising slightly in the afternoon. Overall, it's not been the best time so far. It's been a rocky year so far in 2025, and February especially. So, majority of portfolios are probably in the red at the moment for this month, and that's not rare. So, we had a very good year last year, a very good year 2023. So, a lot of investors are going to hopefully get a bit of a correction this year and get taken back to earth when it comes to expecting reasonable stock results. Obviously, with any market, there's always going to be ones that perform really well and ones that perform not so well. And we'll go through some of those, and that's how people generate alpha and beat out on the market. One of the ones I wanted to go through was Palantir. I actually did a short on this today as well, like Alibaba. And Palantir tumbled 10% to $112 on Wednesday after briefly hitting fresh all-time highs in intraday trading. To put into perspective, Palantir stock has still had an amazing year, I believe up around 300%. The Defense Secretary has ordered the military's top brass to work on plans on an 8% defense cut budget, and obviously Palantir would be one of those that might be affected by this cut. Palantir investors fear that the pinch on data analytics software play, which relies heavily on defense spending. Also, late Tuesday, the CEO Alex Karp adopted a new trading plan to sell up to 9,975,000 shares through September 12, worth more than $1 billion. That is the latest in the flurry of insider sales in Palantir. Palantir stock undercut its 10-day line, but was closely comfortably above its 21 and 50-day line. Overall, you can understand why Palantir investors are taking some gains off the table. It's had an amazing year, like I mentioned, completely shooting into the green. So even before this trading down and after this trading down, no matter when a person sold, they're probably still massively in the green, and this is a great time to lock in some gains for them. With my market and my portfolio outlook, I'm planning to just keep the same things that I hold now and invest more when it comes in. I did invest another $800 into my portfolio, but I invested into Vanguard's International Shares ETF. Overall, it's come down since I invested, which was at the start of this week. But again, the more money that comes in, I'm just going to continue to dollar cost average, and I hopefully aim to not be affected too much by this volatility, and I can just build out these portfolios while staying diversified. Many of these, or all of my biggest portfolio holdings are all ETFs, so I aim to get a lot of diversification in my portfolios. Obviously, you still will be heavily weighted towards big tech, and many of the positions that I pick individually, if you've watched this channel for a while, are big tech stocks. I've held other companies such as JP Morgan, McDonald's, Goldman Sachs, other companies, as well as the big tech stocks, but at the moment I'm very heavily into them, with the only individual stock else that I'm holding that's not in tech is Costco. I love Costco shares, and it's had an amazing run up again recently, and it's done really well for me in the long term, so it's not a company I completely think I'll sell out of. I did sell one share of Costco a little while back, and I moved that money to Google, but I still plan to keep it there as my portfolio gets bigger, and if I think Costco's at a reasonable valuation, I'll invest again, but I don't want to sell my whole position just yet. When it comes to my Vanguard portfolio account, you can see VLC is a company, is an ETF that I've mentioned previously that I might potentially sell out of. I was thinking of using this money towards something like a house deposit or maybe investing somewhere else, because I don't believe in it as much as I believe in my other individual holdings and ETFs. So, and with it just getting hammered, it was a bit of rough timing because the stock was recently trading at around $82 a share. So it would have been good to sell out at those higher prices, but I don't think I'm going to be selling out just yet. I'll keep holding this position, maybe build it, who knows, up until I'm ready to put a deposit down, and then I might use these funds as a bit of extra money in my back pocket. I'm getting really close to hitting $30,000 for VGS. I think if I do another deposit in the upcoming weeks when I get my next pay, I should be able to hit $30,000, which will be a nice thing to tick off. And my portfolio value is very slowly creeping closer to $50,000. The goal was to hit $50,000 by the end of March. I might be a bit short on that, especially if the market has traded down like it has. So maybe I don't hit it in March and instead I hit it in April, or whatever the case is. As long as I keep slowly investing, long term I should be fine, and it'll be nice to celebrate and hit $50,000 in my Vanguard portfolio. The other thing I also wanted to go through is my Excel spreadsheet, just quickly show people how things were looking before we go into obviously some of the big banks and some of the how hard that's been hit. So if you have a look at my portfolios, you can see, again, nothing has changed since my last video. All the weightings are still the same, pretty much. I keep 50% of my American portfolio in VOO, and then 65% of my Australian portfolios in the International Shares ETF. So everything's kind of stayed the same. These figures here at the bottom, where it has all the monthly balances, they'll get updated on the last day of the month. So obviously at the moment when I'm recording this is the 22nd. So potentially by my next video or just after it, I'll be able to update these And then we'll see how things are kind of sitting. Again, over time, you can see this nice trajectory of trading up, which has been really good for me building these portfolios and doing these videos tracking it. And hopefully this can continue. But as I continue to dollar cost average, again, most of these gains are my investments. But slowly as it gets bigger, hopefully some of it will be more compounding interest and other factors where I don't have to rely on how much money I'm putting in as much. But for the time being, that's the best way of growing these portfolios. Next is the dividends. If we have a look at my dividends, again, this is something I update at the end of the month. I had set a goal of earning $2,000 in dividends this year. Obviously, if I'm to sell my VLC position, which is my Australian shares ETF, I will take a big dividend hit. But again, I'm not a dividend investor. I just kind of set that goal for myself because I thought it would be something interesting. I need to focus on capital gains more, especially as a young investor. That's where I'm potentially going to make more money over the long term. So if it means I take a hit of my dividends in the short term, I'm more than happy to take that. Next, I wanted to go through kind of some of the big holdings that make up my VLC position and kind of how they've been getting hit. So if we go and look at NAB stock, so NAB, let's see what's happening, because I know they recently reported their earnings and the stock was down around 8%. So you can see National Australian Bank shares are down 10.65% in the last month alone, which is quite rough, and it's down 12% in the last week. So not a very good time. But if we have a look at the last year, you can see it's still up a little bit. And if you take out that massive hit it actually had a very good year. So, and in the last 5 years, things have been okay. But especially when you compare it to American stocks, these returns just don't look as attractive. Another company that had a selling off recently, another big bank that makes up part of that ETF is Westpac. So Westpac shares are still up in the last year, around 19%, but if we have a look at the last week, it's down nearly 6%, so got hit quite rough. But again, this is just expected to happen with how things have been. Another share that's in there is CBA, so that's Commonwealth Bank. And if we have a look at Commonwealth Bank, that's also down in the last month, not down as much, but it's actually had a very strong year. Even after its dip, it's still up 32%, so investors have been loving Commonwealth Bank shares. I believe it's actually the most expensive bank in the world at the moment. If you look at its PE ratio, it's 28, which is higher than many tech stocks like Google. So yeah, you really need to think about what to do with this, because its dividend has actually been not as big as what it used to be in terms of percentage. And now, if the dividend isn't growing as much as you think it will, then obviously you think the stock price has to be growing. So who knows what will happen with Commonwealth shares, but I think things were very inflated. So this correction was expected to happen with lots of investors kind of that I've spoken to or heard from, seeing this was going to happen a few weeks ago or even a few months ago when the stock price just kept going up. And you can see it's down around 7% in the last week. Another big holding in that ETF is BHP. I believe BHP is actually the biggest holding. BHP is up 1% this week, but it's also up around 3.67% in the last month. Pretty flat in the last 6 months, and in the last year it's actually traded down. So that's one of the reasons I'm potentially looking at selling out of this position that I have. I don't really believe in these companies this much long term as that I do in the likes of Apple, Microsoft, Meta, and so on. And even the banks in America, like I said, I used to own JP Morgan stock and it did very good for me. I think I secured like an 80% gain. Obviously past returns is an indicator of future returns, but when you look at the price some of these Australian banks are trading at, and even some of these mining companies, and they've got very questionable outlooks. Obviously a lot of people invest in them for the dividends, a lot of older investors, and things like franking credits, which is big here in Australia. But I don't know if that's me, especially young at the moment. Is the dividends worth giving up the capital growth? But yeah, this is kind of how things are looking at the moment. I would like to obviously invest some more money while things are dipping, but I'm planning and building up my savings, so that's kind of a big priority for me at the moment. So I'm kind of building up that savings, and then I will hopefully be able to allocate more funds to this after I've hit a threshold that I'm happy with in that regards. I'll do more videos, but this was just a quick portfolio update of how things are looking. Overall, the stock market's been trading down. My portfolio is down around $1,800 since the last one, which is a bit of a hit, but that's not too bad. We keep moving, and then I'll keep doing another video next week. By the time next week, I probably won't have another deposit in, so things will probably be kind of similar. But then the following week after that, I should hopefully be getting back up to that $103,000. Fingers crossed. Feel free to share how your portfolio is doing in the comments, and cheers.